Okay, it looks like we're good. All right, welcome back, everybody. Welcome back to another incredible Thursday live stream. My name is Roy Dunya. I'm the co-founder and CEO of Chart Addicts and Enigma, the #1 educational service for traders and the #1 signals app in the world. What we're going to do today is I'm going to talk to you guys about some fundamentals. I want to give you guys a recession update, what's happening, where we're likely to head over the next 6 to 8 months. And I want to show you guys the trades I'm taking and potentially take some live trades together. I've already explained what's been happening on NASDAQ, which is the pair that I trade. We have consolidation range. All right, bottom top of the range. We're getting to the lows of this weekly range. And so the lower that we get, I'm actually expecting to push back up for a retracement before we continue selling. So there's a few options here. As price is moving down in this descending channel, we can trade the descending channel on the way down, which means if price retests at the market open, then we can take a short position down to 11,500. And the entry price for the sells would be at 11,680. At 11,500, we can take the market up to about 11.9. And at 11.9, we might have potential short opportunities. So there are a few trade opportunities during today's session. We've already gone through the fundamentals for the, well, not fundamentals, we went through the news events for the day. We had PPI, which is the Producers Production Index. It's more of like an inflation index for producers. If producers pay more to manufacture goods, eventually they're going to pass that cost on to the consumer so they don't lose money, which means this is an early indicator of inflation on the consumer side. Plus, we had unemployment claims come out higher than expected. They were expecting 235,000 new people to file for unemployment insurance. What we saw is 244,000 new people filed for unemployment insurance. So there's more unemployed people in the economy than was expected. That about wraps it up for USD news. There's the FOMC member Waller is speaking at 11. The Rocky Mountain Economic Summit in Idaho, yeah, no one's watching that. So I'm not expecting a big mover. All right, we have 2 minutes until the market open. You guys know that at the market open, we're expecting a lot of volatility. That's usually what happens. So right at 9:30, I usually don't take trades. I'll usually take a trade right before the market open. If there's no opportunities at the market open, I'll come back probably an hour after the market opens to be able to take those trades. Oh, my bad, guys. I think I just hid my camera. I don't know where my camera went. We'll figure it out. So market open. What I'm going to do is I'm going to mark off the highs and lows of the pre-session consolidation. No need to extend. So this is the range that we're currently playing in. We have a really nice support and resistance here. And at the market open, what we've seen is, well, it hasn't really opened yet, but we're starting to reject the top of that range. So like I said, we're either going to get a push up to the 11,700 area where we can take shorts. How you would find that is you take the previous high to the low, high to low. And the 78% is right up here at 11,700. So We're getting that push up at the market open. I'd like to see it hit the 88.6. Then we can take retests at the 78%. All right, and for today's session, I'm going to be staying up on the higher time frames. I'll occasionally go down to the 15 just to get a better idea of price action. So we're getting that market open whipsaw. Looks like we just dropped, we went up to the London session highs and just rejected. Now I think we'll see that push down to 11,500. I'm going to wait for that push. This is where I'll be looking to go long, or if this candle flips in the next 10 to 15 minutes, then we can potentially take shorts up here. Keep in mind that the market open does flip around. So you'll have this bearish candle now. It may push down, entice sellers to keep selling at the low and then swipe everybody up. If you do take any positions, shorts are going to be at the resistance, buys are going to be at the supports. Don't be trading in the middle of these ranges, trying to catch trades late. Only look at entries at the top and bottom of the range. All right. Once the market breaks out, don't try to sell it on the outside. Let's look for the previous area of daily structure. And let's look to see if we can find long opportunities down here. No rejection, no entry. Euro USD continuing to the downside. Massive, massive pushes to the downside, while the DXY continues to climb higher. Bitcoin also headed back down for another drop. And some good news for everybody is the price per barrel of oil is back down to 92. From the highs of 124 all the way down to 92, that means that gas prices should start reflecting, and the average gas price around the country should start to come down. Yeah, GJ is headed back. So this could have been a good entry for the swing positions. I think that the market might have already left the station. I was waiting for an entry at 160 and I had another entry waiting at 158, but I believe the market's going to continue. Let's see how this candlestick closes. If it closes above this range, then this is going to be the market continuing the bullish trend. I don't like trading in the middle of ranges, but I'll likely find a lower time frame entry for GJ to catch it all the way up to 178. Very bullish on GJ. All right, let's get back to the show. This is the NASDAQ show. So 11,500, that's the daily buy zone that I have. I want to see one drop to this downside. If the market breaks below these lows, then we can just wait for a pullback at this range and take shorts. But if the market breaks under and wicks back and closes above, then we'll be looking for long positions. So the majority of the market open is a patience game. It's basically just waiting for price to hit a higher level to finish whipsawing and shaking out traders. Because what happened here is a lot of traders started going long once that big green candle started pushing. And then what happened is now it's shaking them all out. A lot of individuals are probably going short as we speak because they see the market dropping and they're expecting it to go down here. What happens is the market's going to hit one of these levels and then make a sharp pull back. If it does not make a sharp pullback and we end up breaking structure, then we know that the market's not respecting structure. We can look at the second opportunity and just take the second opportunity. So while we're waiting for this to play out, let me see if I can get you guys some information on what's happening. Basically, we've been seeing a lot of signs of recession all through the economy. I've written about it. We've put up a lot of videos about this recession, but we're starting to see a lot of, I want to say worrying signs, but signs that it's actually getting closer. So layoffs in the tech sector, a lot of crypto companies are going under. Celsius just filed for bankruptcy, for Chapter 11 bankruptcy yesterday. Coinbase is dealing with some liquidity issues. A lot of crypto companies are dealing with liquidity issues. The staking and DeFi platforms. So if you guys are staking your coins for 15, 20, 30% on any of these platforms, I would, if you haven't already moved them or if they haven't already crashed, I would definitely suggest moving your coins off those platforms. The decentralized finance staking platforms, those are the ones taking the biggest hit right now. Throughout the economy, what we're seeing is the CPI print came out yesterday, way worse than expected. So we had a 1.3% increase in prices throughout the economy, just on a month-over-month basis. That doesn't happen. Prices usually go up 2% a year. That's the target for the Fed. So right now they're up about 9.1%, and we're only halfway through the year. That inflation means that the Fed is not going to step in anytime soon, and we're going to continue shorting these markets. Like right now, obviously, we're looking for a shorter time frame move so we can find a pullback, but the overall trend is still bearish. We're still about to head into a recession. We're not done with the bearishness on the indices. We're actually just getting started. So the inflation print that came out just shows that the Fed is going to keep tightening monetary policy, which is going to continue to drive prices lower. What's the difference between core CPI and regular CPI? Core CPI core CPI excludes gas and energy, energy and food. Those two are very variable and they tend to impact the inflation cost, which inflation is usually supposed to be a lot more stable. Food and energy change so much that they kind of mess with the numbers. So core has those two in there, and headline CPI, core doesn't have those, and headline CPI does. So food and energy are those two. Yeah, the without food and energy, it came out at 0.7% increase. With the food and energy is at 1.3% increase. So food and energy are making up the majority of the inflation costs. So we're almost there. Normally, I would start to layer in trades here and continue to stack as we go down. But for today's sake, I'm just going to wait for one more push to the downside and just enter the longs there. This actually would be a pretty good area to go in for longs, but it might be just a bit early. We're only 10 minutes out from the market open. So what I'm expecting is that price is consolidating here, is going to bounce up and down to entice people to enter the trade and then make one more push to the downside. That's where we can enter our positions around 11,500. We can get a much better risk and reward entry here. Yeah, we're looking at a 4-to-1 R&R trade. If we make it down to that zone, if you enter now, it's about a 2-to-1 R&R trade. So you're cutting your risk and reward in half by entering early right now. If you do enter early, what you would do is you would put your smaller positions here. So you would put in a very small position, and then if the market goes down here, you would put the rest of your position. Now, if price just blows through, don't just enter the trade, wait for price to blow through and then close back above. That's the major key. Patience pays, y'all. Patience pays. Sheesh. This 15-minute candle looks crazy.
Yeah, there's a lot of bearish momentum behind this candle right now. And
For sure. But if you just look at relative to where we are in the structure, the lower that we get inside the range, the more that we're likely to start seeing pushes to the upside because buyers start getting enticed around this area. So we're coming back to this previous area of daily support. You can see this is the previous area where the market bounced from the daily zone and retested before we had this massive push up. So this was the launch pad for that massive push up. Same with whenever price gets above the zone, we get these massive pushes. So as long as price rejects, we can see a rejection here, or we can buy off this orange zone once it, if it does break. So ladies and gentlemen, if you guys are watching this at home and you're not aware, we did launch a new signals app from the Chart Addicts side. It's called Enigma. EnigmaFX.app is how you guys can get on. What you can do is you can sign up, create a free trial. You can get 30 days free on the signals app to take advantage of all the signals that our team calls. So if you guys enjoy the way that we trade on this stream, if you guys find any value in anything that we do on the stream, make sure to check out EnigmaFX.app. EnigmaFX.app and get your 30-day free trial. All right, so what I'm going to do is I'm going to split up my position. I'm going to put in 0.25% risk at the 78 right here. And I'm going to put in the rest of my position as it drops to this lower zone. So I'll have one small entry at 11,540. And I'll put the rest of my entry at 11,500. So the first entry is about a 2.3 to 1 R&R. The second entry is a 4 to 1. Let's see if we get that second entry. Whoa. Okay, that's a candle. That is a wick entry. Sheesh. Did anyone enter a partial position?
Yeah, I got it. I like the
Yeah,
78.
I did
Yeah, I got it
too.
watching.
All right, good stuff. It could still make one more push down to grab break evens or anything like that. So it's, the move is not done yet, but the entry is there. So it's pretty straightforward. We basically have, this is the bottom of the monthly range. So weekly range. So the weekly range is down here. This is a secondary zone that we have on the weekly range. I measured it from the bottom to the very, very top. This is the black line is the 88.6. And then that first entry that I just took, that's the 78.6. If you guys want to know where the fibs are, bigger time frame stuff. So if I was to go remove the drawings, just to show you guys how this worked. Drew the fib from bottom to top. There's the 78 right now. And so I had the 88 zone marked off as my level to buy from. We have the first entry. At the 78, second entry at the 88.6. This is where the patience game comes in. It's still pretty early after the market opened. We still have, it's only been about 20 minutes since the market opened. We're probably going to see this thing touch support a few more times before we finally make the push up. The zone is still valid until we close below these wicks. If we close below these wicks, then bears have taken control. But until then, this trade idea is still valid. Here's the take profit load. Put that out in the members chat. And I want to bring out my old markup here. All right, that's it. Well, it's not it yet, but we are closing above the daily support zone. So we'll see. We'll see if we get a follow through or if we're going to get one more candle to the downside before we push. The whole idea is that we have, we're still moving bearish, but we're very low in the range. So this is kind of a flag retracement from what I can see. And so we had this massive bullish push up, flag retracement. I want to see one more retest for higher lows, for lower high around 11,700. And then there's a potential short opportunity there. We keep creating lower highs. So pretty straightforward. This is one of those trades. If you guys want to take anything away from this call, is that the bottom of a market and the reversal of a market is a process, not an event. A lot of people think that the reversal of the market is it touches the zone and just on a dime just reverses. Really, the bottom of a market is it may do this rejection, it may push up a little bit, come down and play around here before it finally pushes to the upside. But I have an incredible entry. I'm going to be securing partials here pretty soon. I can't see my camera for some reason. All right, there we go. I can see myself now. All right, just want to show you guys, I did secure some partial profits and I'm still running in this trade. I know my screen's kind of dirty. All right. Still holding, and as long as we continue to reject, if one more candle does come down, as long as we're closing above these highs at 11,515, then we're going to continue to look for a long position, just as like a scalp for the beginning of the session. All right, says I'm in. I did. Yeah, I'm in. Dana says I'm in. 527 entry. Good stuff. 527. Damn. I got 545. You got a good ass entry. Yeah. If you guys are interested in the Enigma app, it's in the Zoom chat. If someone can drop it in the YouTube, that'd be awesome too. Let me go through YouTube real quick. This dude is so confused with whatever he's marking on the charts. This man is crazy. I don't know where the confusion's coming from. Boy, what does it mean that now the dollar and euro are at parity? Well, it means that traveling to Europe just got a little bit cheaper. And it means it's the death of the euro. Basically, everybody can see that the dollar is just chugging higher because the Federal Reserve is pulling money out of the system. When you pull money out of the system, it makes dollars more scarce. And so everybody's trying to get dollars. When everyone's rushing to get dollars and there's none available in the market, the value of it's going to go up. So EU is going to continue to go to the downside because euro is going to continue to be more worthless and the dollar is going to continue to chug higher. How would it affect the economy? Well, having too strong of a dollar hurts our trade with other nations. Most of the trade that we do, or probably 70+% of global trade, is settled in US dollars. All the oil trade in the world is settled in US dollars. And so if people are having to pay dollars for oil, but the price of oil is up and the dollar is extremely expensive, then it's just making it harder for the rest of the world to transact with the US. It's making it hard for us to buy foreign goods and things like that. Also, we lend out a lot of money as a nation to smaller countries, and that debt is basically denominated in dollars and the interest is denominated in dollars. So if the value of your debt is just going up and up and the value of your currency is going to shit, it's going to make it very hard for you to pay off your debts. So we're going to see a lot of credit defaults globally from some of these smaller developing nations. So we rejected the outside of the London session range. So this thing could either push down one more time to the 11,500 before we get a move, or this thing is just going to create a little bit of support here and push right back in the range. What we want to see is this previous candlestick wick right here get filled with a solid body candle. If it fills with a solid body closure, then we're headed back to the top of the range at 11,400. Or sorry, 11,640. All right, so we need to see this candlestick fill. If it does, then we're just going to keep moving to the upside. If we get one more entry down here at the 88.6, that's where we're looking to go long again. So far, does anybody have any questions, comments, concerns, anything that you guys want to know about this chart? Like, what if it does this? What if it does that? Is anybody curious about something specific? But I'm seeing that there's some like tension in the YouTube chat. Everyone's talking about this dude. He always on here talking down to people. This man's just talking shit. All right, young Doji, you've lost your privileges of being in this. Go home. Yeah, guys, love everybody. Always, always, always trying to spit as much value as possible and to create, a learning environment here. Please don't be disrespectful in the YouTube comments or the YouTube chat. Let's keep it cordial and make sure you guys are taking notes and learning something. All right, so while we wait for that follow through, let me see if I can show you guys a few interesting things here. National Bureau of Economic Research, the NBER. These are the people that call recessions, and they basically backdate the economic cycles of the US economy. Okay, this is all cool, but I'm looking for something specific. I want to do employment. Business cycle dating. I don't know why that took so long. All right, guys. So if anyone's interested in looking at how recessions form and where they are in the business cycle of America, the NBER, National Bureau of Economic Research, backdates all the recessions in the economy. So you can see this thing from 1950. Every gray bar is a recession. You can see that unemployment is usually very low right before we go into a recession. So right before every one of these gray bars, usually unemployment is at 3% or less, or around 4% or less. And so ahead of this coming recession, we're about to be around the 3.5% range. And then if we go into a recession, we're going to see this unemployment rate go as high as 6%, 7%, maybe potentially 8%. And that's how we can start to look at the recessions. So unemployment is a huge measure. I also look at the St. Louis Federal Reserve website. These are the kind of the sources that I use. And then we can look at JOLTS, job openings. So what we can see here is that we have a record number of open jobs in the economy, almost 12 million jobs that are unoccupied by people who are qualified to work in those places. So out of the working economy, we have about 150 million people that are able to work in the United States, where we have 12 million open jobs. What we saw with the with the unemployment print today is that we still have a high number of individuals filing for unemployment benefits. So that is putting a giant strain on the economy. We have about 6 million jobs outstanding. So 12 million open jobs, 6 million people unemployed. That's kind of what we're looking at. All right, so now we're heading towards the second entry for NASDAQ. I want to see how price reacts around the zone. I want to see price potentially try and break through and then just wick back above. If we see that, it'll be a pretty good opportunity for us to go long. So I am still looking for the long position. If there's no rejection, there's no entry. Yeah, the candle formations on the smaller time frame aren't very encouraging. Kind of just had a massive rejection off of the zone, showing that bears are aggressive, and we're starting to have a massive liquidity push to the other side. So if we push through and we fail to close back above with a wick, then buys are no longer valid until this thing finishes playing around. So it's very simple. If price does come out and hit this zone, and then breaks back above support, then we can just look for a retest and take this thing long again. But the way it looks right now is I want to see a liquidity push through the zone first before we start buying again. Yeah, bears are stepping in a bit aggressively, so we might not even see a rejection here. All right, we're seeing the first sign of rejection here. All right, I'm going to enter one more position here for the longs. Let's see how this goes. The momentum is pretty aggressive on the bearish side, but the zone is pretty good. The risk and reward makes sense on the trade, so I'm going to give it a shot here. So I'm in the buys again. Do not over risk on this trade. Guys, keep in mind that we do have very aggressive bearish momentum. Still haven't seen a convincing push above the range yet. I'm just sort of taking an early entry here. So just understand the risk. Make sure that you guys are using proper risk management on these trades. And let's have a little bit of patience to see if the price wants to reject the 88.6. Yeah, it looks like it wants to break through. This thing's pretty aggressive here. We'll have just a little bit of patience to see if we wick. If we just fill these candlestick wicks with the body of this candle, then it's going to indicate that we're not going to reject, in which case we want to jump out of this trade. Yeah, this thing looks like it's going to break, y'all. Just as a heads up. I'm still holding just to see if we get a rejection, but the way these candles are forming with no wicks, it's not very encouraging. Yeah, we should have seen a rejection by now, y'all. I'm not too sure about the buys on this trade anymore.
Yeah, Roy, that bearish momentum looking strong, bro.
It is. Just got to have a little bit of patience. Because I mean, even either way, I still wouldn't even short to the downside here. So it would just be another game of waiting till the next daily zone to go long. What I really wanted to see was a pullback to this area, 11,690 or 11,700. But if we don't get it, we don't get it.
All right.
Yeah, I don't like the way this looks. We should have seen a rejection by now.
I'm seeing like 11,450 as the next potential zone, maybe for a bounce up.
Yep, I have this level right here. See where this, it's like four, like this whole area of buying, this massive buying pressure right here, body of this candle, massive buying pressure. This whole thing would get filled to the downside. And then as soon as it hits like 11,415, 11,420, that's when we can start to see a little bit of a turnaround. But I'm pretty close to cutting this trade here. We have about 20 minutes left in the 30-minute candle. So, I mean, I guess it could still push up. We could still have a wick rejection, but it's just a patience game here. So we've done our job as traders, found the zones, taken an opportunity. It's time for the market to either respect or reject. So all we have to do is just be patient, and the market's going to give us our answer here.
Yo, Roy.
What up, bro?
So I got a quick question for you.
Talk to me.
So inflation's at 40-year highs.
Mm-hmm.
We've got a dollar that's stronger than it should be.
Mm-hmm.
So the Fed can't really, they can't really control inflation and weaken the dollar at the same time.
Exactly.
So how is this like how's the risk for a recession here more dangerous than it has been say in 2008 and during the dot-com crash? And
Well, good question. I mean, normally the Fed can step in and print money in order to save the day, because when they print money, stocks go up and asset prices go up. In this recession, there's none of that. They don't have any more ammo to be able to use to be able to do those policies. So if we do go into a recession this time around, we're going to have to bite the bullet and actually go through a recession. Whereas in the past, what they've done is just send out stimulus checks. They've sent out a lot of money into the economy. They pumped out, a bunch of trillions of dollars of printed money. There won't be any of that this time around. All right, y'all, I'm closing my trade, just a heads up.
so do you see like the average American consumer suffering a lot more than in the past because of this?
100%. I think that, obviously when there's not a lot of money around and folks got used to spending a specific way, people are going to start to dig into consumer credit. So I think what we're going to end up seeing here is, because there's no stimulus money, we're going to see a spike in consumer credit. So if you guys are listening to this, just try to live below your means and try not to dig into any credit if you can during this period, and instead just try to save up cash and invest that cash.
And a lot of people have been like for the past few years, I've been hearing a lot about like the credit bubble now, how it's gonna pop soon. Now we have a huge debt bubble with the debt-driven society. Is this like could this be the perfect
Storm.
disaster? Yeah, perfect storm.
At the very end of the day, the Fed can step in if things become really dangerous. At the very, very end of the day, they can still print money. And even though it'll make inflation worse, we can bypass a depression or like a really deep recession anytime that we wanted to. So the kill switch is always there, just as a heads up to everybody. But they can't really use it without making the long-term problem worse. Because every time they print money, the price of everything ends up going up because everybody's richer, everybody's expecting inflation. And so they just all start to adjust and they all start to basically charge more. And that just causes more inflation down the line. So they can't use the same tools that they've normally used, which is lowering interest rates and printing money. Now they just basically have to bite the bullet, and we're going to go through like an actual recession. There will be layoffs, there will be some issues in the economy, but overall the US economy is still strong. We have 12 million outstanding jobs, and so it's not like 2008 where there's a shortage of jobs. So if emergencies does happen, there's only 6 million unemployed people and there's 12 million open jobs. So we can fill those jobs. I really want to get back into this long. What time is it? 11:15. Okay, I'll give this candle about 15 minutes to close. But if this candlestick closes above support, then we actually have pretty good chances of continuing to the upside. So we got about 15 minutes. And even this 15-minute candle closes in about 50 seconds or 30 seconds. We'll see how this thing closes. If it closes above support, the trade could still be valid. Mhm. Candlestick closures are candlestick closures. A lot of the times people have a tendency to, or we just, all of us as traders have a tendency to want to predict or to want to, I don't know, just sort of look too far ahead in the markets. I think what we always have to remember is the basics, which is there's an area of support. As long as the body of the candle closes above support, we still have a chance to push to the upside. If the candles close below support and fill, then that's an indication that the market's going to continue to the downside. And so there is some guesswork going on, but really most of it is, has the candle closed above, yes or no? If yes, buys are valid. Is the candle closed below these previous wicks? Yes or no? If they've closed below this area of support, then buys are no longer valid. So really just looking at things in that binary way makes it a lot easier. And even though the 15-minute body closed above, it wasn't a convincing rejection. We'll probably fill to the downside. We still have another 15 minutes on that candle. Re-entries are valid, but I'd like to see a closure of this candle first to confirm. Complete side note. Let me know if you guys are in the YouTube comments. Let me know where you guys are from. I want to see where a lot of the people who are viewing this are from and where everybody is. What is your confirmation for looking to catch the bottom outside of it being the monthly low? Well, that's the biggest reason. We buy low and we sell high. Regardless if you lose, mad props for doing what you're doing on YouTube. Real versus fake gurus exposed. My guy. Anyone thinks it can drop to 11,322? Very possible, yes. Here's the higher time frame. If we break below this current smaller time frame support, then we'll be heading down to the monthly low, which is 11,320 or 11,350. We're still filling, not really into convincing rejections yet. So if you're not comfortable in this trade, if you guys are not comfortable with the way the candles are looking, very simple, just wait this out and watch it and see if you guys can pick something apart or see if you guys can take something away from this call. If you accepted the risk, you guys want to hold the trade, help yourself, you can hold the trade. All right, I think it's very clear that sellers are breaking through at this point. Oh, the second confirmation is also the 88.6 rejection. So that's kind of the main reason I had the zone drawn up. Body of the candles, 88.6 rejection, push to the upside. That was the entry. I'm going to try for one more trade, guys. I'm going to try for one more trade here for longs. And I'm going to try to get that push back up to the London session highs. Yeah, I mean, it's looking good so far. 1 hour. Just need this candle to close the way it is. So we have another 8 minutes. This thing could fill to the downside. So we need the closure. Closure is everything. says closed in blue. I got out. I hope that is the FU candle rejecting 11,500 zone. That's what I was thinking. That's why I jumped back in. I was like, all right, I'll give it one more shot just in case it is the FU candle. But this is the moment of truth. All right, while we're sitting here, can anybody let me know one thing that you guys took away from the call today? Whether it's about entry, whether it's about structure, whether it's about patience, whether it's about entering too early, things that you saw that we did right, things that we saw that we did wrong. Let me know what you guys learned from this stream today.
Patience, patience, patience.
Patience pays, right?
Secure partials.
That's the one right there. It says Naz loves the 88.6. Welcome to the club. Nick is starting to see the whole map, the whole road map. All right, I'm back in profits. It says 1% a day. Shout out to Jordan for real. 1% a day. Let's see, I have to take some else. Entering too early. Still up. Yeah, this trade's wrong.
You take some partials.
Yeah.
Let's start. Let's get it.
This is the patience it takes. It's the patience it takes. All right, I'm reading through some of these. So we have folks from the UK, from Chicago, from Denver, from London, Charleston, Texas, Dallas, Philly, Venezuela, South Africa. How do you analyze earnings? Well, you can just look at the earnings reports for the biggest movers in the indices. You guys have to learn that indices are basically 80 or 90% of the index is moved by only 5 or 6 pairs or 5 or 6 stocks. And for NASDAQ, that's the FANG stocks, Facebook, Amazon, Google, Netflix. So if you look at what the biggest stocks are doing and what their earnings are coming out as versus expectations, because remember, earnings is cool, but it's earnings versus expectations. Everything is in terms of expectations. So I'll just look at the earnings reports for those 5 or those 6 big companies, and it will give you an idea of if it's going to drop or not. Big fan all the way from Jamaica. Can't wait to join the academy. There we go. Looking forward to having you on. Someone said the 3 pattern to the downside. Oh, that is a possibility. You guys see this? We have 1, 2. We could see 1 more down here. 1 more push and then a push up. If that happens, yeah, I'm going to enter again. But I'd very much just like to see this thing respect. Maybe have 1 more touch to get the break evens and then keep pushing. And as a reminder, just in case if anybody's showing up that's new, we did launch the new Signals app, Enigma FX. You get a 30-day free trial to just take signals with us. So you're like, okay, who the hell are these guys? I don't know about this. I don't like the way it is. 30-day free trial, test it out for yourself, look at the performance. We track all of our performance on the app so you can see our winning signals and losing signals. Go in there and try it out. It cannot hurt you to try this for a month. All right. If you really don't trust it, take the signals on a demo account for 30 days and I guarantee you guys will see it. Yeah, or a real account. You'll make enough money to pay for a year's subscription. Either one. So enigmafx.app, A-P-P, enigmafx.app, in case anyone wants to go download this. If you're on YouTube, the link should already be in the YouTube stream. If you're on Zoom, the link is there. Do not miss your chance to get 30 free days, people. 30 days of signals from our team, that could do you right. It could really, really do you right. All right, so I'm going to be honest. I don't know if we're going to get a follow through here in the next hour. Markets have been moving pretty consolidative post New York session, and then we'll have like a liquidity push around noon or around 1 p.m. our time, which is in about 2 hours. So what I'm going to do is I'm going to let this trade sit. I am currently in that buy position. My stop loss is actually below the previous low. I've moved it down a bit below the previous low, and I've put my stop loss at 11, or I put my TP at 11,690. So I'll be holding this trade throughout the session, and I'll keep you guys updated on how it moves. Does anyone have questions, comments, concerns before we hop off? I know it's been a pretty slow moving day. Normally we just get a nice push at the market open. We can get it around 10:30. Market's just moving pretty slow today. So I'm gonna let this thing just basically ride out for the next few hours, and I'll check back in a few hours. If we get a double bottom, that would be an ideal entry at 11,500. Yeah, I agree. What we need to see is price break above this previous area of consolidation. So you can see the structure. Here's the resistance of the previous two candles. If price closes above those two candles, then we have a very good chance of moving to the upside. We need to see a closure above those two candles. It'll pull back one more time. You can get a potential second entry, but the closure above is something I really need to see to confirm the buys. If we keep creating lower highs, then the chances that it breaks out are pretty intense. So I'd like to see this next candle come up and close above this previous structure. If not, then we may be heading for more downside. So closure above the structure, very important. Beautiful. Check YouTube. Big fan all the way from Jamaica. Bada boom, 3-leg extension, Vancouver, New York City. Are the trades posted in the app the same trades posted in the CA Discord? Yes, except we're not going to be posting signals in the Chart Addicts Discord anymore. Everything will be sent through the app just to make it easy. What are good websites to find news on gold and NAS? You can basically just go and just look up NASDAQ earnings report. So NASDAQ.com has its own earnings calendar, and they have some of those. I know Reuters has it. I know Bloomberg has it. JP Morgan has it. So you can go on the actual NASDAQ site and be able to look at the companies and their reports. You can see how they're performing, the market cap, and everything in between. Or you can just look at the stock market performance in general. I look at leading indicators. And so what I see is that retail spending is going down and consumer sentiment is down. That's going to impact earnings in the future. So earnings will take a hit here just strictly because of the fact that the economy is slowing down and people won't have as much money. When people don't spend as much, Walmart stock can't really keep going up. Yeah, this 3 drive pattern is looking likely as well. That would be very, very sickening. Well, already, y'all. I do have to hop off. Keep an eye on this chart. Accept the risk. Make sure you guys make sure that you are using proper risk management. If you are using proper risk management, you'll just let this trade play. If you're over risked in any way, you're going to start to feel discomfort while holding this trade and allowing it to play out. Make sure that you are properly risked so you can give these trades a chance. And that's really all trading is. If you can allow your strategy to really work for you, then the trades will play out. If you continuously hurt your chances of winning because of fear or over leverage or any self-inflicted challenges, then it's only going to make your trading life harder. So make sure that you guys are using proper risk to have the most, stress-free trading experience. Got it? All right, y'all. Happy and safe trading. Download Enigma. I'll see you guys later today for the recap. Take it easy.
Still, this thing's still pushing.
Let me end the stream real quick.